G'day there traders and friends, market participants and enthusiasts right around the world. You are here with James on this weekend market update, also an individual trade recap as at Saturday the 16th of September 2017. I'd say over the past 2 to 3 weeks we have seen a tremendous amount of profits flow to us in our top 12 individual trade lists. I'm going to recap some of those individual stocks in due course. I would encourage you to email me, success@pivotpoint-trading.com, if you have any questions whatsoever when it comes to this underlying analysis, which we use to break down the US financial markets and, of course, our individual top 12 trade list. But what I'd like to do right now for you is just move through some of the, the hurdles that we're looking at in terms of the analysis when it comes to the Dow Jones Industrial Average. Now, really through the month of August, we moved into that consolidational type of phase. Is generally what happens is, when we get towards the end of an intermediate trend, a topping pattern on a trend, the ADX will actually shift to the downside, and that will coincide with the market moving into a sideways consolidation. That has progressed really throughout the entirety of August 2017. Here we are, more or less at the current juncture. Since we have stabilized just above that 21,600 area, the markets once again have moved parabolically to the upside. You can see the difference between Friday 2 weeks ago and, of course, where we opened on Monday. It did leave us with another impressive gap. I've been saying for a very long time that the trend itself is still in effect, and it hasn't given us any definitive signals that it has reversed. Now, that is according, of course, to Dow theory. We are still setting up a series of higher highs and also higher lows. This is still current through to where we are in the month of September. Now, continuing on from that, the Dow Jones Industrial Average on the weekly candlestick, it is a shaved top long weekly Morobozu candlestick. You can see that we have a very slight upper wick, and we have no wick whatsoever on the downside. We closed up 470 points. On top of that, the Dow Jones Industrial Average closed above 22,197, which was our breakout trigger to the upside. So across the board collectively, or at least on the Dow, we are still in a series of higher highs and higher lows, and we're still trending to the upside. That is still true also for the S&P 500. Once it plateaued down here, or based around 2,420, we have just once again assumed the upward direction of the underlying bullish trend. As you can see, we closed above 2,494. We are back up at new historical all-time highs, and everything appears to be a-okay. The ADX and the CCI are liking the bullish breakouts. You can see on my screen, we're printing above that positive 100 reading, and the ADX is turning up. You can see also on the Dow Jones Industrial Average too, printing up or turning up from the positive or from the resting level at 20, and the CCI printing just shy of 150 points. Now, the NASDAQ at this particular point is the outlier. So you can see that we still are marginally below the high that we established on the 27th of July. We pushed up intraday on Friday. We didn't close above it. However, it looks as though we are setting up that of a stair-step consolidation. You can see also the CCI is still looking favorably well. We're above that 100 reading. The ADX is still low, printing below positive 20. So, I mean, the markets are still healthy. They're looking quite okay. But where I want to take this also very quickly is that into the Dow Jones Transportational Average, because on Friday it left us with another continuation type of pattern. This is a short-term consolidational pattern. It's a resting pattern, but it looks as though if we see any traction above Thursday's candle, this is going to take us back up to the highs in due course as to where we were in July 2017. Now, I've been speaking about the Transportational Average as to setting up, the parameters of the market itself. We've got green boxes as support, we've got red as resistance, and although currently we're back in that red box, it looks as though it's only a matter of time until we're going to poke our head back up above this red box as per this current chart pattern, which is establishing itself at the moment. Now, without going too far into the overall market analysis, what I wanted to speak about really was some of the trades that we've entered into really over the past 2, if not 3, maybe even 4 weeks. And just to give you a recap how some of the stocks in our top 12 list are actually tracking. One of those stocks has been Boeing Airlines most recently. This is something which is more or less coincided with the market moving into its consolidational pattern for the month of August. But what has happened over the past 3 trading sessions is that we have seen that bullish leg up and the continuation to the upside. You can see our entries here, 242 and also 246. We're printing at or closing at 249 on Friday, so a pretty decent trade there on Boeing Airlines. Caterpillar is also continuing its bullish trend. I know it looks like a little bit of a dog's breakfast at the moment. It is relatively ugly, but if we just zoom in so you can see this, we've had entries at 115, 116, 116.77, 119.14, and also 119.65. We're closing up here on Friday at 121.37. So again, a pretty decent trade there on Caterpillar, and most of these trades are still in effect. We haven't actually closed out of these. We're still holding on to these, and they're just making some pretty decent profits as the markets continue their bull market. Another one of those trades is COP. We've had entries at 43.88 off from this macro support area, And a secondary entry most recently at 45.48. We're closing up here at 46.51. So these two trades are working out favorably too. If we move into CVX original entry 107.53, secondary entry 110.49, 110.59, and the third entry 113.06. We marginally missed our target up here by 6 cents, and that was on Thursday. We've got a stop now placed at 113.53. So we're just going to see obviously how this plays out, to begin the week upcoming. We do have a shooting star on Thursday and another hangman at resistance. So we do have early reversal candlestick warnings, but at the same time, the trend is still looking quite good and the volume is still supporting the upward movement. So, CVX is another decent trade, which is looking all right. Goldman Sachs is still in its sideways consolidation. Google still hasn't seen that full wave rotation all the way back up to 1,000 or even 990 at the moment, but it's something that should happen over the next coming weeks, if not months. IBM is still trying to transition itself through this dead cat bounce. It is still in a bearish moving trend, but again, positions at 143, 144.88, both are looking okay at the moment, but it does come with elevated risk given that we are trading counter trend to that individual stock itself. Netflix is another trade. This is going back to late August, 171.12, 171.94. This was a bounce off from support. And here we are, another entry at 177. This 180.64 is a stop on the trade. This is to lock in some of these profits, but we're looking at this stock moving all the way up to 189.03. So another pretty decent trade. This is going to be about $20 of intrinsic value if we hit 189, which would be the ideal scenario, but we do have a stop here to lock in profits if we do see a little bit of a pullback. This is looking like a stair-step consolidation as well for Netflix. However, we are still channeling sideways, so we're getting a little bit of a mixed reading as to what is actually occurring over the past 4 days of candlesticks. And just to conclude with, this is Tesla. Tesla's a stock that we've been following for quite some time. It hasn't really offered us a pretty, a genuine trade setup in quite some time. However, fast forward over the past week, we saw the resolution of this symmetrical triangle. We were nearing the apex and we were expecting a breakout. We didn't know which direction it was going to come, but generally what happens is with symmetrical triangles, the breakout occurs in the direction of the underlying trend. And if I zoom out and show you this, you can see that the trend is obviously and very clearly to the upside. So here we are anyway, fast forward into Monday. Breakout entry was at $360 a share, and here we are, we're closing at the week at $379. So a very quick $19 roughly of intrinsic value into those original core contracts. We're still looking at higher prices on Tesla. If we can get above the most recent resistance swing high over here, this is in the month of June, then we're looking at targets all the way up here at $430 a share, which could potentially, if it works out, we're still looking at about $70 of intrinsic value per call contract in Tesla. And at very worst, right now we are risking a whopping $1.20. It's absolutely nothing. These are where the risk and reward ratios open up, and it really leads us down the pathway to profitable trading as well. So really I guess the narrative, or really what I wanted to hit at on this particular weekend market update, is that, look, the trend of the markets themselves, they're still very much so bullish. We are pushing back up above resistance areas. A lot of individual trades and individual stocks are still bullish. And what you need to persist with at the moment is a market that is still grinding higher. We have to sit through, again, periods of sideways movement. But as a whole, we still haven't done any structural damage. In the past, I've outlined what that structural damage will sort of coincide with in terms of price projections if we do certain things. But again, we still haven't breached any of those parameters that I've spoken about in terms of green boxes as support, or even breaking any of these sort of decelerating fan lines to the upside as well. So the markets are still acting very, very nicely. And if you can intertwine, of course, options into the markets themselves and capitalizing on the bullish continuation of the trend, it opens up a world of tremendous rewards as well in terms of percentage gains through the use of derivative contracts too. So on that note, everyone, this is a very humble and sincere market announcement. Obviously, I didn't speak during the week, but again, we've just been sort of following along very closely with those positions. The markets closed out the week very well, and as I sit down and do this recording, I've just finished that pro analysis class as well. It has been, again, a relatively nice week to sit down and recap some of the market movements and also project further forward as we round out the month of September, but also the year 2017, which is really only 3 months away, scarily enough. It has been a tremendously fast year, a very volatile year, but it appears as though the bull market is still intact and we are still seeing higher prices more or less collectively across the board. So on that note, everyone, enjoy your weekend, and I will be back with you most likely this upcoming week. I will put out a few market updates, but again, the following Saturday in that pro analysis class, it is recorded and it is up online at the website. It's housed on the website, so you can look at it at any time. All the best, everyone. Have a fantastic weekend. It's James signing off on behalf of Pivot Point Trading. All the best, everyone. Goodbye.